So what pair do you like watch most times?
Euro USD and GBP USD mostly, maybe and gold.
Okay.
But mostly it is Euro USD and
Okay.
GBP USD.
Let me go
Yeah,
to
those
the smaller time frame. 2 minutes. Now, like I said, we don't supply examples. This is a valid demand zone. The way these zones works is just like when you trust in God and God will do something, or when you trust in a woman. I don't know if you trust woman, but when you like, okay, let me. I want to say something now. See, key levels in the market are not for decoration. I write that thing in my trading plan. Key levels are communication.
Yeah.
Do you want to write it down? You want to write it down?
Yeah.
Okay. Key levels in the market are not for decoration.
Yeah.
Decoration. There are levels that are telling you something, and there are levels that are interpreting human behavior. Because for example, when Euro USD was at 1.067, 1.0672, in the past, the buyers, human knows that when price gets to this level, there are some people that buy, they don't want to lose, so they buy the euro. When it gets to 1.0695, those buyers, they took profit. I know that when buyers took profit, it means when they are getting out of positions, the market will fall. Then the sellers try to sell. So the human knows that when price gets here, the sellers are selling. Remember, when price was at 1.677, 1.0677 key level, which is here, we had price shoot up. So this already is a key level because this is a support zone already. So when price return to this level, those people that buy at the last zone, which I circled, they know that there are many people that are looking to buy here. So my point is, in other words, key level are not for decoration. Like I said, there are levels in the market that are telling you something. They are telling you something. They are not just there for. So the more you increase your intensity of your practice or your relationship with the chart, you get to see that there are certain things in the market that works. Fine, ICT works, smart money works. I use everything. I use support and resistance. Sometimes I use patterns. So my point is, key levels, all you want to do is number one, when you get to the chart, you want to ask yourself, where is the market likely going? Is it going up, downward? Number one. And when you tell yourself that it's going upward, you won't maintain a bias, like you won't be adamant that, okay, this is, I want to buy. No, because you want to have an open mind. If you say you want to buy, the market might be showing you a reason to sell. But because you are so adamant, you might lose. So that's why I say we don't predict the market, we react to what the market is showing us. You understand what I'm saying? So, can you see me?
Yes, bro.
So, key levels are telling you something that what the people done in the past is likely to happen again in the present. Now, this is a very valid demand zone. Number one, like I said, this thing they will show you. They will show you. I don't know. I might upload this video on YouTube, but I don't know. I hope I'm not giving too much information. But anyways,
No, it's okay.
there's no secret. So the last candle, the last order block took out the last low of the previous candle. Let me zoom it so you can see. This order block took out the last low of the previous candle.
Yeah.
And this order block has an imbalance. Listen.
Yes.
So what do you notice? Number one, like I said, this thing, there's what we call repetition. You have to be addicted to repetition. Trading, when you start making money and when you start knowing what you're doing in the market, it becomes boring because you'll be doing every same thing. Like you'll be doing the same thing every damn time. You'll be doing the same thing from now till Jesus Christ comes back. So it gets boring because you already know what you're looking for. Number one, we have a break of structure. There is no need to complicate things. I used to tell people, if you have what is working for you, forget everything else. Number one, we have a book of structure. Number two, we have a price took out, like this other block took out the last low of the previous candle. Number three, these candles here, they have momentum. These candles are not just candles from retail traders. They show that institutions are in this move. You see, they show that institutions are in this move. Same thing here, they show that institutions are in this move. That's like three confluences. Then the fourth confluence is the imbalance. You understand? Now, what do you see? When price return, price shoots up, return to the zone, boom, boom. I see.
Yeah.
That's just it. Same thing happened here. Look at, this is a demand zone. Can you tell me why this is a valid demand zone?
Yeah.
Yeah, tell me why.
So the price here, the last down candle took down the liquidity took down here.
Okay.
Yeah.
Then
we see the big momentum candles.
Okay, number two.
We broke the structure of the week. Yeah, exactly.
Number three.
There is also imbalance.
Very good. Simple as that. You don't need you don't need to be searching for what's not lost. See, let me tell you another thing. If you want to achieve consistency fast, you can search YouTube, but you just want to be searching for, maybe you have some traders you admire. Of course, you have some traders you admire. You want to be searching for risk management techniques. We are still going there. I'll teach you my own. So it's left to you.
Okay.
There are risk management techniques, there are psychology, but anything that has to do with technical analysis, you don't need to search because you'll be confusing yourself. I've been there, I've done that. I already have what was working. I started searching for ICT, I started searching for that. I'll be down. What the fuck's happening?
Yeah.
This thing is not working. Like I'm doing this, I'm doing that. So I had to cut everything. I cut everything and I started going back to my journal. I started going to my journal. I have over 400 trades I've recorded in the last going to 2 years now. So I started going back. I started seeing what I've done right, what I've done wrong. So now, what happened when price got back to this level? Simple. You shoot up. Simple as that. Let me show you another example. This is a valid demand zone. Last sell before the buy. So if you want to the last sell before the buy, this is a momentum candle. This candle took out low. And you can also mark this as taking out the low because this is a week. If you notice, the candle closes above this. This candle right here, this doji closes above. So you can mark this as a week. Then what again?
Yeah.
Block of structure. Why the block of structure here? And then there's an imbalance. Can you see?
Yeah.
So when price return to the zone, then what happened? Boom. This looks short, but already I will take a trade here, I will win, and I will go out of the market because from year to year is like how many pips? This is
22.
Let's say 20. I mean, this is 20 pips. With the 20 pips, I'm okay for the day. I can gain like 2%. I'm okay. And
Yeah.
times on Euro USD, the stop losses are always small. I don't know
Yeah.
if it's compared to GBP USD, stop losses on this time are always small. So now let's check gold. So this is the only thing we're going to do. We still have tomorrow. Let me check what we've covered. So you really need, if you want to like catch up quickly, you really need to be watching those videos and be practicing. That's all you need, trust me. Because me, I will simplify things to you. I don't need to be doing 1 hour, 2 hours. I will just teach you things that you need to know to clarify what is lost in your trading. You know, I told you fundamental analysis, things you need to be looking for. You don't need to be searching for the news and everything that will happen in the world. You don't need it. It will be disrupting.
Yeah.
Technical analysis, we've done market structure. I've told you what you need to look for. Higher low, higher low, trend line to confirm if we're on an uptrend or a downtrend. You know, demand and supply, we've done it. Now we're doing imbalance and order block today. So tomorrow, I will be teaching you sessions. Okay, tomorrow we'll be doing support and resistance. This one is very important. It's also simple. See, most things in trading are simple, but what makes it difficult is we always want to trade. We always want to do this. Trading is hard, but the way you approach it has to be simple. So we will not complicate the process. We believe that, normally in our day job, if you work from morning to night, we believe that we are hardworking, but the reverse is the case in trading. Simple things works. So the most difficult task is the psychological thing. You control your emotion, have patience, discipline. When you do temptation, resist temptation. That's why as a trader, trading will teach you a lot. As a trader, you need to know how to resist temptation. That's why you see most traders. You can't entice traders with ladies or any addiction unless they just want to do it. They are always a master of their emotion. You can't tempt. Like you need to have power over temptation. Can you hear me?
Yes, bro.
So those are the things that makes trading difficult because naturally human beings are different. So to be successful in trading, you need to have a mental shift. You need to erase your pre-existing beliefs. All this is I'm saying. See, with time, even when I start my YouTube channel, it's gonna be more of talks than technical analysis. Because technical analysis is the most little thing that determines your success in trading. There are a lot. We have daily routine, we have meditation, we have psychological strength, we have mental strength, we have discipline. There are some things that if you do against your will, you have to discipline yourself. We have patience, very, very important. Patience is very important. Can you wait for 2, 3, 4 days without taking a trade when you can't see something clear? Most traders, they can't wait. So when they make money 2, 3 days, they'll blow the remaining money the next day. They'll blow. So there are a lot that determines your success as a trader apart from technical analysis. Technical analysis is just like a direction. And if you know where you are going, like I said in the previous session, if you know that you are going to Kampala Airport now, are you going to fly? Are you going to enter bus? So there are a lot that will take you there. It's not just about direction. Okay, you say you want to be rich. You don't know, you don't have plans, you don't have goals, you don't have steps. About that, even when you get to 80 years old, you still say I want to be rich. The money will never come. So technical analysis is the least, like it's very important, but it's the least thing. Have patience, discipline, everything. So like I said, tomorrow we'll be discussing support and resistance and other topics. So the ones I underlined here are the one we've covered. So now I will show more example on the imbalance and other block. So let me go onto the chart. This is gold.
Okay.
This is gold. This is the second pair I enjoy trading, but since like November, I've only been trading one pair. Since last year, November. I've never traded gold since then. Look at this thing here. I want you to tell me why this is a valid supply zone. The last buying candle for the sell. Tell me why this is a valid supply zone.
The order block, yeah, took out the recent higher high.
But this is not high. This is high and low candles.
Sorry.
High highs and higher low are swing lows. But this one is high and low. You know a candle. Do you know about candlesticks?
That?
Do you know well about candlesticks?
No.
You don't know candlesticks?
Oh, I know. Doji.
Yeah. Bullish engulfing, bearish engulfing. So this is, if it is a bullish candle, this is the close, this is the open, this is the low, and this is the high. Let's assume this is an hammer. This is an hammer. You know an hammer candle?
Yeah.
Or let me use the most popular one, the bullish engulfing. No, this is okay like this. So if it is a bullish candle, the market, it means the market opened here. The price opened here. And you know, candlesticks are interpreter. They're interpreting something. So it means when the market opened, it went up, which is the eye of the candle. Then the lowest low that the candle came back to is this place. You know, in the past, because you know, if a candle represents an interpretation in a particular time, it can be 1 minute, it can be 30 minutes, it can be 1 hour. Then the price closed here. This is the close. So if a candle closes here, I don't know if you know this philosophy about candles. That's why you see closer to each other. Anywhere a candle closes is where the next one will open. So let's assume we want to have the next candle now. It will open here. So now the last close will now become the new open of the next bullish candle. Hey, Shaya, let me do like Dr. Efrain. Do you know Efrain?
Huh?
Do you know Dr. Efrain? You see. So now the last has now become the new open of the new candle, forming a new close.
Close.
So now this is a close. This is the new high. This is the new high. And this is the new low. You going? Can you see?
Yes, bro.
So now, here, we have a bullish candle that closes. Okay, the bullish candle opened here. It's opened here. It closes here. This is the highest high the candle has gone in the past 15 minutes. 15-minute candle. This is the lowest low the candle has been. Now, what did you notice? You know, it's a bullish candle, which is moving upward. So when it closes here, that's where we had a new open on the next bearish candle. Do you understand what I'm trying to point out there?
Yes, bro.
So now, the high of the last candle took out the high of the previous candle, which is what got us to those candle, this thing, which is here. This last high took out this last low. I'm sure by now it's clearer. You see?
Yes, bro.
So it's confirmed this other block is valid.
Yeah.
So don't just mark any other block. Then we had a break of structure to the downside with the momentum. We have inducement. Inducement is like when they say they want to confirm something, it's like one of the greatest confirmation of zones. Because with inducement, it tells you that price is coming back to take out this inducement and return to the zone. Because this is the normal, techniques of how the market makers operate. So a block of structure is momentum candle. The last other block took out the last high of the previous candle, inducement, then imbalance. Very, very important. Very, very important. You should never forget that.
Yeah.
So the whole space here is imbalance. It happens that our imbalance here is very wide. So that's not a problem. So what do you notice? 80-90% of the time, it price returns to that zone. My brother, boom. Just look at it. This thing works like magic. Can you see?
Yes, bro.
Now, check this one now. This is a very valid supply zone because we have a very valid order block. The last high took out the last high of the previous candle. We had a break of structure to the downside. We had the break of structure on the internal structure and also a break of structure on the external structure. This is external and this is internal. Don't get lost. I don't want to be using terms because you don't need all these things. I know what I'm saying. I don't want to be using terms. All those things are just, they confuses someone that is trying to get something. You don't need it. So anytime you see me mentioning terms, maybe it's by mistake because that's, whenever I'm analyzing, that's what I tell myself in my brain. So this is a valid supply zone because we have a valid order block that broke structure to the downside. We have an imbalance. Simple stuffs. We have an imbalance. We have momentum candle. We have inducement. We have over 4 to 5 things that confirms this zone. So we are still going to inducement. But first we will deal with support and resistance. So I hope I'm recording. Okay. So when price got to that zone, tell me what happened. Boom! Can you see?
Yes, bro.
That's just it. You need something that you can come to the chart and see. You need something that the patterns or system that when you come to the chart, they reoccur. They show on Monday, they show on Tuesday, they show on Wednesday, they show on Friday. That doesn't mean you will be engaging with the market every day. You understand what I'm trying to say? But you just need something you can trust in, that you know that even if you are in Kampala, you are in Uganda, you are in Nigeria, you are in USA, you can just pick your laptop, your internet connection, and you will check the chart and you will see that thing that you can recognize. That's what determines success in trading. So it's that thing that you do on a $10 account, same thing you would do on a $100 account, same thing you would do on a $10,000 account, same thing you would do on a $100,000 account. So it's called repetition and replicate. Replicate it on it. So that's just it. So where it works is now is the practice, and the psychology part. For now you don't need a video, but there is a video that I listen to every day that sharpens my mind. You understand? So, like I said, I hope everything here is simple as I've we projected.
Yes, bro.
So even if you watch those videos, because I will be sending 2 videos today also. So
okay.
8:30 a.m. tomorrow morning. So I just don't confuse yourself. Trading is already hard. So you just have to approach with a simple technique, simple process. Now you can repeat over and over and over and over again. This same thing is what I'm doing and is what I'll continue to do. Even when I get my dream car. I don't want to tell you my dream car yet. No, when I buy it, you see. So look at it. Look at what happened here. That's why I said I like to catch quick things and move out of the market. This is a very valid demand zone. I'll be posting this video on YouTube. This is a very valid demand zone because the last candle took out the low of the previous candle. Number one. Number two, we had a break of structure on the internal and the external, but I'll be marking the external. See, the last swing here was broken with the body. That's the 2 complex. Number 3, imbalance. Imbalance. Number 4, inducement and liquidity. Everything here has shitty price. We call them inducement, this is inducement, this is liquidity. They're still coming there.
Yeah, equal.
Structure, other block and demand very well. So the liquidity will be very easy for you to grasp. Then what happened? When price go back to that level, what happened? Boom. The movement from year to year is 900 points on gold. 900 points of gold with a stop loss of, let's say 300. Let's say with a stop loss of like 300. You have your 1:3 clean. So it's not about riding the market from here to USA or from here to Japan. It's about being able to stay out of the market every day if you aspire to be a day trader. And if you aspire to be a swing trader, there's also nothing you can do. There's nothing difficult. You just have to sit down and use what I will be teaching you and create. But what I'm teaching you works well with day trading. So within 2-3 hours, you make money, you're out. Within 2-3 hours, you make money, you're out. You even check the charts unless you want to practice. Most times, during the early hours of London session, I trade. So within 11 or 12, I'm done. So the only time I stay longer is when I don't see opportunity around London open. So I'll wait to see if there's going to be opportunity that will present itself during London close. So apart from that, everything I do is a simple approach. It has taken me lots of pains, agony, loss to arrive at that kind of state. So it took me a lot to realize trading, you really need simple things to work. On the 5 minutes, like I said, price is fucked up. This is a valid demand zone. This is also a valid supply zone with an internal structure.
Yeah.
So do you have any question regarding?
Not really. The only question that I would have asked is maybe but I'll see it later.
Later.
How do you know that the take profit, the ratio to your take profit, how? But
we are still going to discuss
later. Exactly. We'll see that later.
What you need to know is what I'm prioritizing, the so-called priorities. All those ones are what you need to be worrying about once you know what you want to do in the market. The first thing you need to know is you want to put the chart now. What do I want to do? What am I looking at? You can't just open the chart and say, okay, I want to take profit. I want to. You understand? So the priorities are what matters most. And I'm glad that I'm able to take things a step at a time. That was the process. So when you look at those videos, this one, I think these two videos, I'll post it on YouTube. So I'll share the link. Number one.
The text of?
I showed you 3 types of support and resistance.
Yeah. I know them. Actually, I know them. They're called the falling wedge, rising wedge.
No, those ones are patterns.
Oh, patterns.
Those ones are trading patterns.
It looks like the same.
Yeah. So let me just show you the difference.
Okay.
Between support and resistance and demand and supply.
Okay.
Simple stuff as usual. A demand is a zone that buyers are looking to buy.
Yeah.
So a supply is a zone that sellers are looking to sell. And what it's to sell? Probably another block that will mark. You get?
Yeah.
This is supply.
Yeah.
This is the demand. Now, what's the difference? The difference between supply and demand is this. A demand is a fresh zone. When you're watching these videos back, you need to have your pen and paper so you can be jotting the points down. If I said I should be writing time will be going. A demand is a fresh zone. Is a new zone that sellers are looking to sell. Why a supply is a fresh zone sellers are looking to sell. So a demand zone is a fresh zone buyers are looking to buy, while a supply zone is a fresh zone sellers are looking to sell.
Yeah.
But a support is an old zone. It's an old zone that buyers have tested in the past. Now this zone, this is a demand zone, but if it's want to turn to a supply zone now, then they will need to test it the second time and test it the third time. So now the supply zone, the demand zone is now support. If it gets tested more than once. Same thing as a resistance. The resistance turns to, so the supply zone turns to resistance when it gets tested more than once. So supply is a fresh zone, but when it gets tested more than once, it turns to a resistance. That's the only difference. Nothing else. So you want to be buying in a demand zone. You also want to be buying in a support. You want to be selling in resistance. You also want to be selling in the supply zone. Simple as that. first thing when you come to the market, you want to look at market structure. Okay, are we uptrend or downtrend? Okay. The key levels we have talked about so far is demand zone, supply zone, support, resistance. So once you know where the market is going, which is number one thing, the direction, then you look for support and resistance or demand and supply zones. Then you look for entry. You are still going to entry. So that's the only difference. There is nothing else. Supply zone is a fresh zone. But the moment it gets tested more than once, we're having second rejection, third rejection, it turns to a resistance. The demand zone is a fresh zone. But when it's getting tested more than once, then we're having the support zone. So now let me show you a chart.
Okay. For example, that is why most of the times when you buy on the demand zone, like, and you set on the break even, at times price comes back and hits the break even and then goes back. So it has
exactly.
Okay.
That zone is strong. But you know, people that buy, like the bank and all these institutions, when they buy, let's say they have like $something billion to take a position. They don't go in with all the money. They divide it into three. So the first move is always the strong one, which is the demand zone. So they make a position of like $10 billion. So you see the candles, boom, the momentum shoots up. And you know that they still have $10 billion. So the remaining $10 billion, they might divide it into two. So the second position, they will wait or they will intentionally push price down to the first demand zone.
Yeah.
For example, this is the strong zone.
Yeah.
When they took this position, they took this position with $10 billion. So that's why you see this momentum. Yeah. So they will intentionally price back down. So the second position, they will take the position with 5 billion. Then the third position, they will take it with the third 5 billion. So the tail traders will now follow the legs. So that's why you need to see shortly movement. So they are the ones that all these moves.
Okay.
Now this is the supply zone. Let's assume everything here was ideal before. Let's assume everything here was not there before. You know, this is it. This is not valid supply zone. But it might be valid when we go to the lower time frame. You understand?
Yeah.
Trying to make the point here. So this is a very fresh supply zone. So what we are waiting for is price to come back to the zone. So now let me delete it. So now the supply zone now turns to resistance because it has had multiple rejection.
Yeah.
So there are lots of selling opportunities that have happened in the past year. You can sell based on supply, you can also sell based on resistance. Same thing here. This is a valid supply zone. This is a valid supply zone. Can you see? We had a break of structure in the internal. We have an internal break of structure. We have an imbalance. This candle took out the last eye of this. We have inducement. When price return to the zone, what happened? Push. So now the supply zone has now turned to resistance because it's no more a fresh zone. We have had multiple rejections, 1, 2, 3, 4. So now the original supply zone that turned to resistance has now turned to support back. I hope you're getting it.
Yeah, I'm getting it.
So don't get confused. Another important thing is how you enter trades. But these things are the important things you need to know first. So when you gather everything, and you start I start seeing entry patterns, it will make more sense. But these things are the most important thing in trading is direction and key level. Sometimes entry, you can even enter wrongly. Because once you know where the bus is going to, it's going from Kampala to the airport, and you know the bus stop you want to enter. Entry is the easiest thing. You can decide to enter with your two heads. You can decide at the booth. You can decide to sit on top of the bus.
Yeah.
Scenario. So entry is important, but it's not as important as direction the market is going and the key level, which is direction the bus is going and the bus stop. You can't enter at the wrong bus stop. You understand?
Yeah. And
key level, it took me a lot of time before I discovered this. I'm always like, I want to enter. Once you are right about the market and you are right about it, many times you make money, you win. Trust me.
Yeah.
You just notice that you are always right. You're always right.
Yeah. Like for the other trade I sent you for the was it Euro USD?
Yeah.
Like I knew it was going down, so I risked, like I was like, okay, I know it's going down, but so it won't go like higher than more than 20 or 30 pips for the news. So exactly like that thing, that stuff. So I get what you mean. So once your technical is right and the fundamentals and you have a key level,
exactly,
and you just enter, most of the times like it won't deplete your account, if you have some money. Exactly. That's what you wanted to mean.
This zone here is a demand zone.
Anywhere
you see a long wick like this, if we go to the lower time frame now, I don't want to change the time frame to avoid confusion. This wick is it's a bearish candle. So it's a valid demand zone. So it's a demand zone before all this whole thing happened. So now it's now a support because it's no more fresh. We have had multiple tested. Now look at what I showed you. This is the third time we are saying this. So this thing happened in the market all the time. A strong candle that broke to the downside. Then another candle back in. So when we see a fake out, most often than not, price will return and move in the opposite direction. Can you see? So everything is on the chart. There's no secret. The only secret is that there are some things I've discovered that you have not discovered. That is what you are paying for. That is also what you paid for. So when you marry your chart, you even discover things I don't know. That's the secret. There are some things that you will discover with time. You see it keep on repeating. That even me, I don't know why, because I already have what is working for me. So that is it. Let me show you another one. That's the difference between demand and supply. This is a demand zone. Candle that took out the last high, the last low of the previous candle. We had an internal break of structure because this is a counter trade. So it's not a major break of structure, but it's an internal, but you can just take trades. What happened when price get down to school? We also had imbalance. When price is not to the school, what happened? It shoots out, boom, boom. So now it was a fresh zone. The moment we have multiple rejection, one touch, two touch, three touch, turns to a support. So simple as that.